Hello and welcome to another update video about the DXY. Analysis is quite interesting at the moment because we had quite a bit of volatility in the last few days. And yeah, the analysis so far hasn't actually changed. There's just some distortions on the micro level. Let's first talk about the two larger degree scenarios, which are still possible at the moment on the DXY chart. Overall, my view remains that we are here in an ABC correction and that this C wave should take us down to around $90, at least the low $90 region over the coming months. Probably not weeks, but months. It takes ages, yeah? Now, there are two ways how we can get there, how I see price could get there. The first view, and you will know both of them if you watched the previous videos. The first view is that the B wave here topped already here. So that we came down in an A wave, we rallied in a B wave, and we're now coming down in a C wave. However, that would have to be an ending diagonal, and it would have to be counted as follows: off the B wave top, which in this wave count was on the here 9th of March. We have to count a wave 1 to the downside, a wave 2 to the upside, a wave 3 to the downside, a wave 4 to the upside, a wave 5 to the downside. I don't like the look of this count, but it's absolutely a possibility. This pathway would work out as an ending diagonal, more or less, maybe as a price channel, or here some kind of a wedge pattern, yeah? This is how typically those diagonals work out, and it would take ages to get there. Very, very slow, choppy, slow price action, overlapping price action, not clearly impulsive. This is absolutely a possibility still, but getting a little bit less likely now that the price is pushing here higher and higher. Now, when does this get unlikely, this move, this ending diagonal? Well, let me just think. If I just need to check something. This gets unlikely above $104.54. I actually have this dashed line there anyway already, because then we would break above the 78.6 retracement level of the move to the downside, and then it is going to be very difficult to call that a wave 2 retracement. Okay, so hopefully that's clear. That's the pivot point. I'm already leaning to the higher B wave scenario, which is the second option. They're both very likely. But this is the wave count that we looked at in detail in the last videos, and I'm still leaning towards that. Here an A wave down, but the B wave is still unfolding as a flat structure. The detailed count is already on the chart. Based on this assumption, we had an A wave up, the B wave down, overshooting B wave, and now a C wave to the upside, because the move up looks fairly, yeah, you can say it has at least an impulsive look. And that would just confirm the idea that this could be a C wave in B. So we could push a little higher. Again, this will be confirmed above $104.57. We're very close anyway. And then we should start a C wave down later. Looking at the microstructure, I mean, what did we talk about in the last video? Last video we said that I will start to assume that a top has been made. So we had the microstructure here. I take the micro count off, but everything else still valid. What we talked about is, one second, this needs to go here, probably here. We said that if price breaks below $103 and we get a sustained break below that level, I will start to assume a top is in. We originally identified this green circle as a target. Now we've already touched it a few times. Maybe we get there with this last spike here. But we never broke $103, okay? So we can still focus on higher. And yeah, basically this was just sort of an idea where we should get to, yeah, in this C wave. I probably have to look at the micro count of this, but the idea was that this C wave is actually also unfolding as some kind of a diagonal structure. We had here a 1, 2, 3 is probably still in the making, but maybe we just need to look at that. Looks actually a little bit as if, and then here maybe a 1, 2, and we could push still higher. But we'll see. I mean, the micro count will shift in a diagonal structure. The key is that we need to understand that here in this scenario, as long as the $103 level is holding, we can still push higher. A break below 103 would make me lean towards, okay, we're already in the C wave down and we already topped here. Then probably in this first scenario I showed you, B wave here and then 1, 2, and we're coming down. But at the moment I'm leaning towards a higher B wave. But important for you is to understand, okay, when do probabilities shift? When do we start to get confirmation that we are already in the decline here? And that would be below $103 basically, yeah. And then a break below $100.50. This B wave low will be further confirmation. And of course, then the break below $99.50 will be even further confirmation. So for me at the moment, key is to watch for the $103 level support. Until then, we can go higher. And this is sort of the general resistance range for the higher B wave. Looking at potential targets here, $105.38, $107.17, and basically 109. These are standard retracements. We can also add an extension level that might be worth watching, and that is the 1.618 extension up here at $107.79. But also be aware that the 1-to-1 ratio, basically that would fulfill the minimum expectations here, is also around $104.60. So there is quite a confluence here in this region around $104.50, $104.60. Previous resistance and Fibonacci extension levels and retracement levels that we looked at in this video. So primarily still though focus on higher as long as we're holding above $103. Below that level, things are going to start to break down and we get some clarity that we are in this C wave to the downside in yellow. But at the moment I'm leaning towards higher prices as long as we're holding that support. That's my update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.